Welcome to Instant Insights, GlobalData's strategic intelligence podcast series. At GlobalData Strategic Intelligence, we track over 100 tech industry, ESG, and macro themes impacting all major sectors. I'm Douglas Blakey, the Banking and Payments Group Editor at GlobalData, and today we're discussing the future of AI in retail banking. We are, of course, talking serious money here. GlobalData's recently published Generative AI in Banking report forecast that for just Gen AI, the global Gen AI market in retail banking will be worth some 8.6 billion by 2028, up from $261 million as recently as 2023. So just what are the biggest near-term opportunities for AI in retail banking? What is the state of the market as regards bank implementation of AI? And what are some of the barriers holding banks back from faster adoption? These are just some of the key questions we're looking to address in this short podcast. And to help us, I'm delighted to be joined by a stellar group of industry commentators, namely Bareisis, the Director of Retail Banking and Payments Practice at Celent, Olly Downs, the Chief Technology and AI Officer at Curinos, Ryan Cox, the Head of AI at Synechron, and Andrew Ellis, the US Consulting Sector Leader for Banking at KPMG. Jill, thank you very much for your time. We're talking about the future of AI in retail banking. Give us something on the current state of AI adoption in retail banking.
Yeah, hi, Douglas. Thanks very much for having me. Well, of course, AI is on everyone's minds right now. And when it comes to retail banking specifically, though, I think it's worth remembering that it's an industry that is data rich, but also highly regulated. So at Celent, we work with banks and their technology partners to help them make confident technology decisions. And as part of that, we always track closely where and how banks are investing in technology. And each year we conduct our what we call dimensions research, where we survey financial institutions on their technology strategies and investment priorities. We recently published the results of this year's survey, which had 245 retail bank responses from all over the world. So I thought maybe I could share a few findings with you because that does talk about where the industry is right now.
Yeah.
So what we heard loud and clear is that AI and advanced analytics, of course, is the biggest technology priority for the industry for the next 18 months. We asked respondents to rank their priorities in order, and 53% said that it was one of their top three priorities, ahead of other important areas such as digital identity, automation, or cloud adoption. And of course, there are different forms of AI, and the one that's been attracting the most attention recently is generative AI. And I think it's fair to say that it's still relatively early days for Gen AI adoption, but our survey shows that already 37% of banks are live with using large language models and Gen AI for things like fraud or process failure detection, and 33% use it to support their IT developers. Now, when it comes to actual products and services that use Gen AI, it's 18% of retail banks that now globally are already live with at least one of them, and a further 54% are experimenting or running a pilot. Interestingly, the European banks appear to be the most active in this area, with 21% saying that they're live with Gen AI-based products and services. And in terms of the areas where they're planning to invest in Gen AI, 44% of banks said digital channels was their biggest priority, followed by 32% that said marketing and 22% in financial crime.
So when it comes to Gen AI, an awful lot of banks are already active, but on those numbers, still the majority are not live. What do the retail banks see as the biggest barriers to implementation?
Well, I don't think anybody would be surprised to hear that security and risk concerns top the list. Again, in our survey, 55% of banks listed this as among their top three barriers. However, if you look at the concerns that are most often mentioned as number one, were actually challenges over a business case 24% said that. And the fact that technology is not yet mature enough, 23%. Well, and of course, not surprisingly, retail banks are also quite worried about the lack of regulatory clarity and guidance, with 38% citing that as one of the top three barriers.
So, what does the Celent research tell us about the future of AI in retail banking?
Well, I think the future is quite exciting. Obviously, it's very hard to forecast when everything is changing so rapidly. But I think I can offer three thoughts, I think, on this. First of all, I did mention that in the beginning that retail banking is a data-rich industry, and I think AI is and will be essential to help harness that data to create, highly personalized experiences for retail banking customers, while also at the same time protecting them from fraudsters. The other thing is, if Gen AI was the buzzword of the year in 2024, then this year the hot topic seems to be agentic AI, systems that can essentially operate autonomously. They make decisions and orchestrate specialized AI agents to perform the tasks that you need to achieve a desired outcome. And in another report we just published, we recognize that again, the technology still needs to develop further quite a bit, but we recommended that bankers should be developing their AI strategy with the anticipation that agentic AI supported workflows will become a viable option in the next 5 years. But this is still about optimizing how the bank operates internally. And of course, in my mind, I think the real game changer is if and when customers themselves start using AI agents that can act on their behalf. Who and how will be providing those services is a question mark, and it's probably going to be a battle that quite a few parties will try and fight. But I think it probably will happen, and I think longer term banks will really have to rethink what customer engagement means for them in this brave new world.
Exciting times. Gilles, I hope we can speak again on this, but meantime for today, Gilles Bareisis, Director Retail Banking and Payments Practice at Celent. Thank you very much.
Thank you, Douglas. Appreciate it.
Curinos works with 46 of the 50 largest US banks, and it works with the 6 largest Canadian lenders, some 1,500 clients globally, including 800 credit unions and US community banks. Olly Downs is the Chief Technology and AI Officer at Curinos, and Olly published his first academic paper on generative AI back in 1999 and has lived through various evolutionary stages of AI. Olly, thanks for your time today. It kind of makes the obvious first point. AI isn't new, but what's maybe new is that it's now coming out of the lab and into practical business environments.
Yeah, Douglas, thanks for having me. And yes, it is. I think what we're really seeing is a real democratization of the capability, both for businesses to make use of the capability and the tools existing, and then also the direct exposure to the consumer and the general public. And it's creating a low friction for the types of language, spoken, written, conversational interaction with technology that I think we've aspired to for decades, and really right now we're in this wave of achieving.
What next? What can we hope to see next?
Well, we're in an interesting domain, and particularly as it relates to banking, I think we're going to see a democratization of access to individualized experiences that can really be tailored or personalized to the individual. Another wave, post the internet wave of democratization of access to information, including specialized information presented and summarized in ways that anyone can understand, which I think is just a great up-leveling, enables a great up-leveling in terms of the type of contributions every individual can make.
And what are some of the unique challenges for the banking sector as you see it?
Of course, in the banking sector, we live in a strengthened regulatory environment that's already sort of built up around analytics and statistical methods and predictive methods, and now bringing AI to bear. The EU, the UK are building out quite strong regulatory frameworks in the space. And I think there's very high appetite in the banking industry to embrace AI technology. It's tempered with this caution around how do we do that in a way that will be inherently compliant with this regulatory environment. I think the challenge there is it stifles a little bit the ability to confidently innovate internally in a bank, and very active search and appetite for enterprise solutions developed specifically with the banking industry in mind that can be compliant upfront. And when I think about compliance in the AI space, I think about it as finding the right points in automated solutions that use AI to insert a human in the loop and create those right boundaries between AI driven and human intelligence driven decision making and experience creation.
Olly Downs, Chief Technology and AI Officer at Curinos. Thank you very much for your time.
Thank you, Douglas.
Delighted to be joined now by Ryan Cox, the head of AI at Synechron. Ryan, thank you very much for your time today. You've said, I think, that Synechron's mission extends beyond merely harnessing incremental advancements in AI, and that the aim is to orchestrate a human AI partnership to unlock productivity and innovation. What might this mean for banks that are looking to get a return on investment on their AI investment?
Douglas, thank you so much for having me here. I think I can answer that in sort of three main areas. So I think first and foremost is just an overall enhanced productivity and efficiency along with cost reduction. So if we look at that for humans and AI, to gain that ROI, we're really thinking about how AI can integrate with the human expertise. So banks can ultimately help automate those repetitive, boring, and mundane tasks, allowing employees to really focus then more on strategy and creative activities. So that then effectively leads to increased productivity and efficiency and contributing to that higher ROI that you were asking about. I think on the cost reduction side as well, AI can minimize some of the operational costs and minimize some of the errors that happen at scale. I think secondly, we look at innovation and just overall competitive advantage. So that's really taking, we as humans really have that creativity that we bring to the table. AI is just not there yet. So AI provides that algorithmic precision, if you will, and that's both a combination of Gen AI that everyone's talking about, as well as some of the classic machine learning. And that also helps us drive innovation. So thinking about new products and new banking services. And then finally, I think the third major area is overall improved decision making. And that can be at top of house from the C-suite, as well as some of the key lieutenants in the organizations as they're now able to get data-driven insights. So that's how I call the intelligence layer on top of the analytics. And that really enables banks to make those more informed decisions. And then that means that you effectively become a lot more data-driven and are more accurate and precise in how you unlock that productivity and innovation.
Sure. Something else you wrote that jumped out at me, I wanted to raise with you. You referenced a desire to, quotes, push the boundaries, those quotes, in banking. Given the regulatory environment of the sector, what does pushing the boundaries mean in practice?
Yeah, I think there's always that fine line between innovation and regulation, but I don't think it has to be an either or. So we approach it, pushing the boundaries means how do you know that regulation is both here and it's highly evolving, and how do you take that thought and notion and really lean into it? So we kind of think about it in terms of responding with innovation by looking at how banks are collaborating with fintechs and vendor partners such as ourselves to integrate advanced technologies into their operations. So we really are thinking about, we know that there are regulatory expectations and we want to build and understand as a wider community and almost create a race to the top mentality where banks are not only looking to where banks are not only looking to hit those regulatory standards, but really looking to exceed them. And I think that's an important differentiation. That's really what we mean by, pushing the boundaries. Of course, we also look at things like, digital compliance and, how can we understand those regulations, use AI to break them down and help teams implement them. And we also look at governance and controls and think about how we can holistically look at fortifying these controls as part of core safety and soundness. So we're kind of thinking about multiple angles, but ultimately it means how do we put these two things together and innovate while we're still ensuring regulation and compliance.
Understood. And lastly, something on take-up. Now, I mean, the majority of banks are still not using AI to its full potential. What, in your view, is holding back faster implementation?
I think there's a number of factors. I think if we look at, the fairly typical ones of bridging the skills gap, thinking about a higher implementation cost, as well as integrating with legacy systems, those are all challenges. But I think first and foremost, as I really work with a number of clients on this, is really ensuring that data privacy and security concerns that all organizations have. Because if you look at the financial institutions, protecting sensitive customer information is one of the most important things that banks need to do. So AI in banking really raises significant privacy and security concerns. So we have to think about that in terms of where robust cybersecurity measures can come in and compliance frameworks. And to incorporate all of that along with particularly Gen AI as it's still maturing and companies are getting used to what it can and can't do, I think is what's holding folks back. But we're working with them on a number of different frameworks and approaches. And probably like any major technology advancement, we think in terms of how do we iterate over this and make small steps while still looking at long-term goals and how we can achieve both.
Ryan Cox, Head of AI at Synechron, thank you very much for your time today.
Thank you again, Douglas. It's been a pleasure to be here.
Delighted to be joined by Andrew Ellis, the US consulting sector leader for banking at KPMG. Andrew, thanks for your time. What does KPMG's research tell us about the current state of AI adoption in banking, or indeed bank plans to adopt AI?
Yeah, Doug. Well, that is a question we're receiving from a lot of our clients right now, and the fact of the matter is that the intake of banks focus on AI is, as most would imagine, is exceptional. Our research would show, based on our surveys conducted year over year, both in the U.S. and globally, is the executive teams of some of our largest financial institutions, let's say just a year ago, 60 to 70% of them were making those investments. That number has now ticked up to 98%. And the investments are made really in a few key areas around customer risk and cyber, as well as back office operations, is where we're really seeing the investments being made and an incredible focus and a thoughtful approach to implementing it at their institutions.
And when it comes to AI, what do you think banks see as the biggest barriers to implementation?
Yeah, so it would really be a few things. Based on the conversations we've been having with our client base, it really comes down to, I would say, data privacy is a really hot topic. Really trust around where that information is coming from. Is it protected accordingly? The security implications of that data point, and really ensuring that just given the complexity of these financial institutions, that it is coming from the appropriate source of data. On top of that, you have the regulatory landscape, which is obviously very focused on some of those areas, but also ensuring that the regulators are comfortable with their approach to not only the data protection, but the governance of AI at the organization itself.
And looking ahead, your take on the future of AI in not just retail banking, perhaps because you're covering the whole gamut, banking as a whole.
Absolutely, Doug. So, from our standpoint, we're really seeing the evolution of AI at our clients. We had some general workflow focus. Now we're really getting into the use cases and the implementation around a lot of assistants and chatbots, utilizing generative AI for kind of the customer servicing side and reach outs to clients. But really, where the industry is going is the path of agentic artificial intelligence, allowing the machines to make decisions based on rules, which is really powerful when it comes to looking for new channels of revenue, efficiencies around credit administration and lending, as well as some of the more traditional areas around back office operations, allowing that to be more efficient and really tying the groups together. So lots of exciting things ahead. I think, when I look from 2024 to 2025, incredible evolution of our clients, putting forth the governance and steering committees and really making sure they're being very thoughtful in their approach. And as we move into 2025 with all the implementation and execution work going on, and the way the technology is evolving, some very exciting things we're looking forward to in the next few years and working with our clients on.
Brilliant. Thanks. Well, I'm glad we can end on that positive note. Andrew Ellis, US Consulting Sector Leader for Banking at KPMG. Thanks very much for your time.
Thank you.
The clock has, I'm afraid, rather beaten us. That is all we have time for today. Meantime, this is Douglas Blakey, Banking Group Editor at GlobalData, saying thank you again to my four guests, Bareisis from Celent, Olly Downs from Curinos, Ryan Cox from Synechron, and Andrew Ellis from KPMG. And many thanks to all of you for listening. Until the next time.